Questions I receive from social media. I keep trying to save 20% down to buy a home. Do I really need 20% down? My name is Anne Silcock, Realtor with Dwaine Jones, Loan Officer, here to answer your questions. Do I qualify for an FHA loan if I'm not a first-time home buyer?
If you have not lived in a home or had an interest in a home in the last 3 years, then you could qualify for a first-time home buyer. So if you own a home currently right now, then you wouldn't. Actually, no matter what the situation is, even if someone gifted the home to you on the tax record that you own that property, then you wouldn't actually qualify. However, if you're moving from another state, then you would qualify for FHA first-time home buyer program.
As a foreign national, would I qualify for an FHA loan?
Well, that depends. If they're actually coming from their country, if they currently own a home, coming here depends on if they actually have, if they're a permanent resident or if they have an ITN number or things like that. It just depends on a few of the things that they actually have going on. It depends on the lender if they're actually going to qualify for a first-time home buyer here in the U.S. So it's a lot of ramifications that can go into that.
I keep trying to save 20% down to buy a home, but it seems impossible sometimes. Do I really need 20% down?
We do not need 20% down. That's only if you're actually trying to avoid PMI. That's private mortgage insurance. Private mortgage insurance doesn't benefit you, the buyer, at all. It's simply there to protect the lender. So if you can actually get 20% down, kudos to you. But if you can't, as a first-time home buyer, the minimum you need is 3.5%. And in some cases, depending on the product I have going at that time, you may not even need that. It'd be a USDA loan, a VA loan, and there are some products out there that we offer where there's 100% loan to value right now, zero money down payment with some of the products and services that we offer right now at this time.
I have some credit situations, but I'm willing to buy a home soon. Do I need perfect credit to get approved for a mortgage?
No, not at all. And actually, a lot of the people that we deal with, that we see in today's society, are going to be people with not perfect credit, but we're seeing some people with average and or marginal credit, which is something that we see a lot. In the retail channel, when I was actually in retail, it was always 620 or 640 credit score. But that's not the case when it comes to being in a broker channel, which I tend to work for. I'm actually able to do 580 credit scores, and even in some cases, I've done things in the 550 credit scores. So it actually depends on whether you're retail or you're working with a brokerage. It also depends on, things in the credit scores, not just about the credit score, but if it's like if you change your jobs every 6 months, if you move, every year and things like that. If you're stable, got stable employment, a lot of times they actually take those mitigating factors in with your credit and everything to make a decision when your credit is marginal. Those are called mitigating factors, and we use those when they have marginal credit, when we're trying to get someone to finance for a home.
So does paying someone to fix your credit score really work?
Well, it depends on the score. If you've got just one or two things that, based upon my experience, me looking at your credit score, I'm able to say, hey, if you pay down this revolving debt or credit card, this is what it would do for your scores. We have things that actually work in the background that actually help us when we're working with people's credit. To say if you pay off this much, or pay off this debt, this is what your credit score could potentially be. We call that credit expert. So we're working with different tools that we can use internally to tell people what they need to do to fix their scores. But if, their credit's really below marginal and it's really, a wreck, then sometimes like that, we would refer them to someone that does credit restoration.
How quickly could we do this?
I could do it within a matter of days. We could usually have something done in under 30 days when we come to pulling your credit, number one, see where we are in order to get you where you're going.
Do I pay PMI for the entire length of the mortgage?
No, and actually, we talked about that before, about the 20% down. So as soon as the value of the property is actually under 20%, you can actually forego that PMI. And another way that you can do that actually, depends upon the company as well, who's actually servicing the note. It depends on, some of them say 11 years. So after 11 years, then it can actually fall off or either refinance.
Will the lender actually notify me when I reach that level, or will I have to notify them?
You'll have to notify them particularly.
Thank you, Dwaine, for being here and answering those questions for us.
You're welcome. I appreciate you having me, and anytime you have any people reaching out to you with those type of questions or myths, let's get together again and we'll bust those myths.
Thank you.
Thank you.